Well, greetings, everyone. I'm Rex Crandell from Walnut Creek, and we're going to start a business tonight and have a lot of fun and learn a lot of technical stuff. And there is a lot of technical stuff, but fortunately, you just have to go through it once, and then you move on to other things. But in the beginning, we got a lot of curves and decisions to make. Is anyone in a business now? Yes.
I've been a sole proprietor for about 15, 20 years.
6 or 7?
15, 20?
Okay.
Yeah,
And
but it's sole proprietor. I've offered consulting services, marketing, and now I'm just starting out as a franchise broker. So,
franchise real estate broker?
No, just franchise broker.
Oh, you're selling franchises.
I'm matching people who want to be entrepreneurs
Got
with
it.
franchise.
I understand. Yeah, cool. Yeah, you're a business. Yeah, but definitely. Sole proprietor is not to be looked down upon. It's a respectable occupation. I hope. Yeah, I've been in business my whole life. College, I had a landscape and a building repair business, and then I started my tax business and a lot of different things. I've got several different activities going right now with different entities. And keep busy. Oh boy, we got some more people.
Yeah, that's where it locks.
They locked out.
Yeah.
Sorry, you're too late.
Oh, we got lost.
That's okay.
Okay.
You got time. Is that door locked?
Yes.
Don't close it then, please,
Don't close it?
because we don't want to lock out everybody.
Got it.
Thank you. And then if you could sign in, grab one of each of the flyers. So, I was just giving you some background on what we do. We have an office in Walnut Creek. We do a lot of income tax for people, wills, trusts, estates, businesses, decedents, estates. We do estate administration, probate, and we also do estate planning and business formation and business consulting and things like that, problems solving. We have a lot of fun. I've got 3 assistants that help me, and we keep moving all the time. That chair's taken.
This one's taken.
Yeah, it's
Okay.
my assistant, Krista, as soon as I can find her. She's got a broken foot, so she's hobbling. You'll see her hobbling here. I do have a cough, so you're going to hear it. So we have, are you business owners?
We are not.
Not, okay, so we have one. Okay. So you'll be our model, our example. So in the handout you have, I'm going to cover, these are PowerPoint slides, but I'm not doing PowerPoint. And I will reference page numbers every so often so you can catch up or whatever. So, how to start a business in California. It is, when you deal in law, California is so over-regulated that you get stuff from out of state, don't plan on applying it in California because we have just so many layers. I call it diarrhea of the legislation, but that's because I have to deal with it. So what do you need to do to start a business? Plan a little bit, like kind of think about what you want to do. Think about how you're going to finance it. We're going to talk about entity types. You get to pick one. Register your business, get a fictitious business name if you're a sole proprietor. And choose a location, check zoning. Look for specialty licenses. California has more licenses than any other state.
Doesn't surprise me.
It's unique. Employer responsibilities is a big deal. Tax reporting, we're gonna cover some of that. And then ongoing responsibilities. Okay, second page there, we got $1 million. That was quick. Okay, that happened right here. Prepare and plan. So it's suggested that your first order of business is to prepare a business plan. There are several reasons for it. It gets you to think about stuff you never would have thunk about otherwise. So it's useful to do. Find out about your industry, how big is the industry. One way of looking at it is create an avatar of your ideal customer. Say a family with 2 kids between 25 and 40, live in the suburbs, or some other, what is your ideal customer? Your business plan is your blueprint. Do you plan on spending some time on it? If you're going to be looking for third-party financing, you're going to need to give that report out to try to secure financing. And when you get started, you're going to need consulting on different subjects that are technical, because there's a whole bunch of things that apply to you. You need to figure out what applies, what doesn't. Okay, I'm only going to be concerned with this. So what type of business? You want to be a concrete contractor? You want to do parachuting? You want to do whatever, travel services? There's a lot of different things. And right now, we're in a place in history where it's cheaper to start a business than ever before because of the internet. You don't need like leases and all this other stuff that you would have had to use in the past. And we're not going to cover internet stuff. We're not going to be covering marketing. That's not what we're doing here. You can get that other places. But identify a need and how your service is going to benefit the consumer and how is your service going to be better than the competitor. There's a problem. There's got to be a problem, otherwise they don't need you. They take care of everything. What the hell? Take a hike. So you've got to solve a problem that's cost effective for you. And one of the problems with starting in a business with existing competitors that are large is large competitors have a larger buying power and a lower average cost. So when you're starting out, you have a cost thing you have to deal with, and you can make up for that with sweat equity and not paying yourself and things like that. But it is sometimes difficult coming across big competitors. Let me give you an example, since I'm in the tax business. H&R Block. Okay, big deal. They're a public company. Do they compete with me? They can all they want. They got a whole bunch of simpler returns that they do, and a large volume worldwide. I think they even got branches in Australia. But what we do in my office is everybody else says, "Oh, that's too complicated for us. Go make Rex do it." So we don't get the simple slam dunk. Turn them over quick. We get some really weird, complex problems, and that's I guess you'd call it a niche. And there's a lot of places for competitive research, market analysis. Public Library, Google has some side services on economic analysis that you might look into. So on your business plan on page 6, we have kind of the head notes or the table of contents of what your business plan should include. The executive summary, you do that last, forget it. It's a summary. A description of your business, real simple. Then you do your market research, find out what the volume of your industry is, what the average price points are, the competition, if there's many small competitors or a whole lot of large or a mix. How you're gonna run your business with staffing. Family and friends is a good way, get all the family members. You wanna live under this roof, you're gonna work as a slave for me. I hear that sometimes. But that only goes so far. Describe what your product or service is very clearly, and skip all the big words and trying to sound like an MBA, that all these words that they're real ambiguous. Just use normal language when you're explaining this stuff. How are you going to market your product or service? You're going to market it internet, salespeople, combination of both. Fundraising, that would be startup capital. In addition to, like, some people will start a business, keep their regular 9-to-5 job, and have this other business going in the weekends and evenings, so that's fine. At some point, it's going to grow and it's going to put a damper on your schedule somehow, because I'm told there's only so many hours in a day. I only work part-time personally, 12 hours, that's only a half a day, so it gives you a lot of other time to move off. Financial forecast, you've got to kind of try to project it, and that one's really difficult to think what you can sell. And then the appendix would be supporting documents, charts, graphs. And then after you've got it all written, then you go back and you write your executive summary after you know what your thoughts are. Okay, financing, startup. It can be costly, doesn't have to be. I mean, I've started many businesses that cost hardly anything. But if you're gonna start a gravel pit or something that's huge with a lot of equipment, you're gonna have to have some capital. And at different sizes. Usually the larger entities are, groups of capital people, and they've got a whole bunch of experts and things. There's small business loan guarantee programs. There are a list of financial development corporations in California that provide access and direction towards finding capital. There's a capital access program in the state where the state tries to lean on banks to give small business loans. And then big time, if you're going to start a big water project or something, industrial development bonds, but that's big time. So where to get capital? There's friends, family. That's one way to do it. If you lean on family, be really careful and think about, if there's hard times, how's that going to affect Thanksgiving? I gave you 100,000, you flaked out. That's not going to be looked on graciously. So be real careful. I was, remember, I do scuba diving, and one guy came over, he says, "Oh yeah, I'm starting a scuba business. I want to come and tell you about it." I didn't realize that he was coming over to sell me on, being an owner. Yeah. Oh, I see. I just happen to know scuba businesses never make any money, so I was kind of ahead of that game. They just can't make enough money to keep going. But yeah, we ended up having the business. We were in it for a long time. I don't know if he's still running it or not. We got 2 locations. Got it going pretty well. On page 8, we have, they call angel investors. there's a thing for, they call them accredited investors. So you have to have like over $1 million assets, not including your house, over 200,000 of annual income, and it's a term put out by the Securities and Exchange Commission. And if you're an accredited investor, you can invest in a lot of things that other people can't, because the government wants to protect people from, putting their last 20,000 down, and that was their food money for the next 5 months. So there are groups of accredited investors, they call them angel investors, and there are groups, you can find them, there's books, and they're a band of angels, Tech Coast Angels, Angel is Sacramento Angels. So these are people that have gotten together, they're all accredited, and I guess it's kind of like Shark Tank. You want to buy out part of your company, and they do want a piece of the equity. And the angel investors can, they usually take businesses earlier in the development. When you get into the venture capital group, they're a little bit bigger time, and they want to see a good track record of really growth potential before they get into it. And they do really well. I mean, a lot of the tech startups have used that. There's a really good book written by a venture capitalist named John Doerr, D-O-E-U-R or something, and he's got a TED Talk, but he was part of the financing behind Intel, Google, and just mega rich, and that's what he is, a venture capitalist. And so he's looking around for these companies that are taking off, and they do pretty well. I've got a client in New York, and they're doing some tech stuff, and they've got all these securities, and they got all kinds of venture capital money, and they're just going crazy. They're having a great time. Okay, choose an entity type.
Right. Do you have any suggestions or things to think about when you're working with an angel or a venture, like how much stake is reasonable?
How much?
How to determine
The percentage?
Yeah.
I don't. I understand there's some software that can help calculate that, but it's all based on value judgment. I think it's based on, there's hype, they call it blue sky, and there's opportunity, and there's ideas. Ideas have no value. Okay, it's just an idea. Opportunity is something that exists that, hey, we could do something and something was going to happen. And it's how big that you see the opportunity. But I have no experience in that. Couldn't advise as little as possible. As soon as you get less than 50%, you're not calling the shots anymore. So people like to take 51. And at least I can have the last say in it. And you get 49%, and then you might get fired, which can ruin your whole day. It wouldn't take your shares away, your equity, but it would change the direction of the business. But I'm sorry, I just don't have anything. One thing you got to be aware of, though, is do an implicit value of your company. You put $10,000 in my company, I'll give you 10%. Guess what? You just valued your company at $100,000. Not even thinking about it. So that can come back to either help or hinder.
Yeah.
And then there's other things, equity conversion. I mean, they got debt, and then as soon as you start making money, we're going to flip it into equity. I mean, the sky's the limit on how you write those things. But I think it's what you feel comfortable with and how much they're giving you. You've got an opportunity, let's say, where you can open 100 franchises right away with the equity money. Well, okay, we might be able to do something, and you're managing the idea and making the opportunity come into effect. So we're going to cover sole proprietorships. That's no legal entity other than a person. Limited liability companies, which are overhyped. Corporations, couple flavors, C Corp and S Corp. General partnerships, you don't see too much of it, but if you have two sole proprietors, could you let her in? She's locked out. And I feel very sorry about that. Welcome.
Thank you.
Could you grab a flyer, one of each of the flyers, and sign your name that says you're signing your house over to us? No problem. So if you have two sole proprietorships working together, you don't have a proprietor anymore. You've got a partnership. That's how that works. Then there's limited liability partnerships, which are only accountants, attorneys, and architects. And a limited partnership is a format where one person on the top has unlimited liability, and all the limited partners don't have any liability and they can't manage. If they manage, then they're no longer a limited partner. We used to have those a while back in tax shelters. I had a lot of fun with those. Okay, so I'm on some page, if I have page number, couldn't tell you, 9, 10. Okay, courts. C Corp and S Corp. They're different. A C Corp pays tax on its net income, and an S Corp doesn't. And I'll show you how that works. So I think this might be a charting device here. So C Corp, you have this funnel, and how do you like looking at my back and not the picture? Not so hot. All right. So you get net income. You have income, you got all the expenses, and oh man, we got some money left over. In a C Corp, that money left over is taxed. Highest rate, 21%. And that's a C Corp. It gets taxed. And then you pay dividends to all your shareholders. And all those dividends are taxed too. It's called double taxation. So all stock market companies are C Corps. You get dividends, you get taxed on the dividends. Same thing if you own an C Corp. You're the owner. Okay, you already paid the tax. I want the money, just pull it out. Man, get to pay tax again. What a thrill. Well, not really. So I always worry about my C Corp clients. It just so happens that they always take out enough payroll where they don't have any net income left over. It's just magic. You got this much income? Oh no, that's my payroll. And I'll pay payroll tax on that, but I'm not paying double tax, and that is not a dividend. I'm sorry. And so we turn in it's 1120 is the corporate form, tax form. By God, there's no taxable income, like clockwork. It's a way to do it. Then, S Corps. S corps. I'm just getting used to this little chart thing. It's got some stickiness that I don't like. Okay, S corp. First of all, every corporation when it's born is a C corp by definition. And then you get different flavors depending on what happens. And I use the term entity a lot. And there are two kinds of entities. There are natural entities and there are legal entities. Natural entities are like humanoids. They have babies, they go wah, and everybody says, oh, how cute. That's a natural entity. Like a sole proprietor is a natural entity. Okay, then there's legal entities. What's that? Oh, you form a corporation. You form an LLC. So what? A legal entity can contract, it can sue and be sued. So it is an entity into itself as a separate tax ID number. It's not a people, but it's definitely a person. In law, it's called a person, a legal person. So just keep that in mind when I talk about entity. If you're a sole proprietor, you don't have an entity. It's you. Okay, so the S corp, we have the sales up here, then we have all the expenses, and then we have net. Okay, so we have, let's say we have 3 owners and 9,000 net. So what happens is there's a hole in the bottom of the bucket that all the taxability falls out every time. You can't stop it. It's called a K1. It's a tax form. And so whatever your share of that K1 is, it's going on your personal tax return. So in this case, 3,000, 3,000, 3,000. And that K1 can have anything flow through it. Like it can have capital gains, it could have interest. It's, these forms, it's 1120S is the corporate name of the tax form. But you see, I never said that this net income got taxed at the corporate level. First time I said C Corp got taxed. No tax at the corporate level. It just falls out like a leaky pipe, which is good, with the exception of the state of California. They want to get you $800 a year to be on their mailing list. And that's all it is. But to be a corp, you get to pay $800 a year. And they say, how much does it cost to form an S corp? I've got an S corp I formed in 1981. I paid over $33,000 of minimum franchise tax fees. How much does it cost to start an entity? It depends. But it's definitely a cost. Back in the paper. So a lot of people like the S corp. There's some cool stuff with the S corp. Sole proprietor, income, expense, net income. Net income goes to the income tax. Net income goes over to self-employment tax, a second tax. Oh my gosh, what's that? Oh, that's your Social Security. It's 15.3% of your net income that you get to pay involuntarily, or you don't file your taxes. That goes into your Social Security account. I guess you'd call that good, but some people don't like it. Okay, so now bring in the S corp. With the S corp, we have this net, we're talking about, but what if we took out a reasonable salary? What if we, out of those expenses, took a W-2 for the owner? And I'm just use small numbers. Hypothetically, the salary should be 20,000. You took a reasonable salary. Now, each of the owners. Now, there's no SE tax on the distribution from an S corp if you properly take payroll. Does that make sense, or am I confusing hell out of you?
What's the difference if you do that though? Because you'd be paying them a W-2 then, right?
Okay, so if this was like an LLC that everybody was operating, you'd have 3,000 into your income tax, 3,000 into your SE tax. So by having it an S corp with payroll, you only have it in income tax.
Okay.
We call it beating the FICA game, is what it's called.
Okay.
Because you took a reasonable salary. Oh, I'm okay. Now I don't have to pay that goddamn 15.3%. Oh, I'll just skip that and move along.
But wouldn't you owe that on your W-2 though, right? Like that's.
Yes, but the rule there is you take a reasonable salary.
Okay.
It's not everything.
Oh, okay.
That's
So
the
you can make
difference.
it as low as you want it to.
As low as you could do with a straight face to tell IRS that's what you're worth.
Got it.
You say, I'm not worth very much. Uh-huh. Yeah, just don't ask his wife. She sends him over here to take the class. So that's pretty cool. The S corp has that really unique feature of beating the FICA tax. And yes, you do get a little coverage of Social Security. What you want on Social Security, you want 40 quarters. Then you're in. You get Social Security. So if you had a self-employment business and no net income, on your Schedule SE, 1040 Schedule SE, you claim the optional method. And so you pretend like you had 2,400 of net income, and you pretend like you owe self-employment tax, and you pay it, and you get 4 quarters towards your Social Security. It's a trick. It works. It adds to your 40 quarters. It's called optional self-employment tax method on Schedule SE.
So that's basically 10 years, 40 quarters?
Yes.
10 years, yeah.
Yes. Yeah, that's how it works. Okay, so S corp, fine and dandy. Any questions before we leave the land of S corps?
Any place we could read a little bit more of what you just described, because I got some of it, but a little bit of it went over my head. It's been a long day, so.
Yeah.
Yeah, or,
Where can you get more about it? I don't know.
okay.
Do a search on beating the FICA game, S corps avoiding self-employment tax, S corps why reasonable salary. That'll get you started. Okay, so we're out of the S corp. Oh, as I mentioned before, anytime you file a corporation, you start out as a C corp. How do you become an S corp? You file a form 2553 with the IRS and say, hey, I want to be an S corp. And my wife says it's okay. Really, your spouse has to sign it. And then you turn it in, and now you're an S corp. That's how it's done. So you do that. If you want to be an S corp, you do it right away after you file your corp. Don't wait, because if you wait too long, they'll make you be a C corp this year, and they, oh yeah, we'll give it to you next year. Okay. So this is the one that cracks me up, the LLC. These legal Zoom ads. Oh, let's make it official. Click here and be an LLC. It's like, you know, what am I, nothing before I click there? What's this all about? And they don't tell you all the ramifications and downsides. They forget that. So, limited liability company, it's not a corporation, okay? So, with this one, you have your income and then your net. Fine, we've seen that before. And we also have the holes in the bucket again. We have 3 owners, let's say. Let's keep it simple, 9. 9 income, 3K, sorry about my handwriting. Okay, so, and that comes out, as we talked about on a K1, to your personal tax return. Now, in an LLC, with all your net income, you have the opportunity to pay income tax plus self-employment tax, and you can't stop it. It does not pay tax on the net income. But California threw a wrench in the bucket. You get to still pay the $800 to be on the list. Oh, boy, I'm thrilled about that. You still get to do that, so don't feel left out. But with an LLC, you've got the added advantage, disadvantage. Well, it's an advantage if you're government, but when your sales get above 250,000, you have to pay 1.2% of your gross sales as an additional tax in addition to the 800. Isn't that fun? I had a company came to me, and we were doing their taxes. They had an LLC. And I looked at all the numbers and I go, holy cow, you're paying $10,000 a year to be an LLC based on your sales, and your net income doesn't warrant that. I said, you gotta get out of this LLC. We flipped them into an S Corp, $800 a year from then on. So if you have high gross sales, LLC comes back and bites you.
So it's just for a smaller business then, really, is what you would say, with lower, maybe a smaller
If
revenue.
you, 250,000.
Yeah, I think underneath, it makes no sense above that, then, really under.
It's only 1.2%, so if you go over it a little bit, it's not gonna kill you.
Right. But the bigger you go, the less sense.
If it goes, your sales go way up, you get clobbered. And LLCs are frequently used all the time in real estate. You get 3, 4, 5 owners. You get 3, 4, 5 different LLCs forming another LLC, and 2 or 3 of them go together and they buy something. It's like a telescope. Happens in real estate all the time. So LLC is the most popular, and it's pushed the most. It hasn't been around that long. What it ended up happening is a combination of between the partnership and the corporation rules. It came out in the mid-90s. But I just laugh when these advertisements say that, you know, they're talking about forming your company. And the company was so nice when they formed my LLC, and I felt so good. What difference does that make? You made a dumb decision. Yeah, I'm glad you feel good about it. That's fantastic. But you don't need, and my point being, and I emphasize this a lot, don't go out and form an entity, burn $3,000, and then get out there and try to find out if anybody wants to buy your stuff. It's a complete waste. Had a client came in, he got a super idea, construction, a certain product, tool. So he formed the company, and he's gonna go out, and he's gonna do it. And then pretty soon, nothing's happening. Nothing ever did happen. And they did it again. About 10 years later, they got another, oh, we're gonna have this, that, they formed the entity, and I go, okay. Fine. I just closed the entity out, so they get out of the 800 now. And they came to me another time, and I wouldn't form their entity. They had this special oil product that was supposed to be a certain thing. And I said, have you sold any of it yet? He said, no. I said, go out to your target buyers, go out and sell, and then come back to me. Well, they never came around again. I just kind of gave up on that one. So that's a big deal. You're gonna start a business. Don't go just throwing down 3,000. And the way they sucker you into it is there's limited liability. Yeah. Like if you do consulting, you're gonna get sued for $100 million. Huh? Huh? You know, where's the real liability? You're making jewelry and somebody's gonna sue you because they poked their finger. Really?
What if you're in a business that might actually have liability?
Like what?
My wife, her father in Mexico has a pest control business that she wants to start here. I assume there's some sort of, there could be liability to the chemicals and stuff that you have.
Okay, so with state of California, you've got the pest control license board.
Okay,
And then you get business insurance in addition to that.
okay. Which is separate from having an LLC or something.
That is
Okay,
true.
Got it,
That is true.
okay.
And so you can combine business insurance, and then another factor you can put on top of it is an umbrella insurance. You know, my insurance goes up to 800,000, but above that, I've got 2 million of umbrella.
Okay.
So it's a good way to pay insurance, and people think that it just cracks me up. They say, oh, entity, you got limited liability. It's like they know what they're talking about. They don't. Let me tell you how it works.
I have a quick
You have a question?
Yes.
I have an answer.
Okay, great. So I've been in business for like almost 20 years, but I needed to go back to basics, so I came here.
Yeah, well, we'll basic you then.
So I used to be an S corp, and then my accountant suggested I become a sole proprietor and get business insurance. And
Kind of like what I said, huh?
yeah, yeah, because we got tired of paying the $800 too, and then they
Yeah, it's
sent
no
like
fun.
so much paperwork to sign that I don't understand. So anyway, being a sole proprietor is good. But thank you for explaining the self-employment tax and the income tax, because up to now I never had to pay the self-employment tax, but just
Now you
for
get
this year
to.
I do.
Yeah.
So I didn't understand at all what that was.
It's all, you get to start all over. Whatever your normal tax bracket is, your net income for your business, you move that net income over to Schedule SE, and then you bring it down, and it's 15.3% of that net income.
Okay. So that's what it is, self-employment is for social security.
And you have
My
to put it in on
accountant is
your
too
quarterly
busy to
tax
explain
payments.
anything, so thank you.
Yeah, people don't explain anything. Oh, you need this. Oh, yeah. They go,
Yeah, because
"That's
I would
what."
just sign and send back, and
Oh,
so now I thought I would come
It's
and
just
learn.
such a,
Because I have strong sales, that's my other thing, so, I needed to go back and figure out the
yeah,
foundation.
well, now you know the truth behind Schedule SE.
Okay, so social security in 40 quarters, okay.
Yeah, and it goes into your social security account, but you gotta foot the bill. So, I was gonna give you my view of the limited liability. Okay, so everybody says, oh, I got risk. Oh, yeah, I'm gonna be selling apples at the flea market, and I'm gonna have $100 million risk. Really? How's that gonna happen? Okay, let's be paranoid. So, let's say you get sued as a sole proprietor. Okay? What can you do? You can go to court and represent yourself. You don't have to hire an attorney. You fill out the papers. I didn't do it. Wasn't my business. They weren't my apples. They weren't my worms. They were somebody else put the botulism in there, not me. It came from the farmer. So you represent yourself. So we're talking limited liability. Okay, now let's say you have an S Corp, LLC, or a C Corp. They sue you personally, and they sue your entity. And then you walk into court, and you say, Your Honor, here I'm representing myself. They go, are you an entity? Are you an LLC or corp? The judge says, I can't talk to you. You have to have an attorney, or I can't talk to you. True. So you go to the attorney and say, I'm getting sued for botulism in my wormy apples. And they say, well, no problem, we'll represent you, just give us $45,000 and we'll show up once. And let's say you don't have that money and you can't hire an attorney, and 30 days goes by, you just lost by default. Your name was on it, your corp name was on it, and you're personally liable because it went into default. Oh, wonderful. No personal liability? Far from the truth. If you get sued for a whole bunch of money, you can at least fill out your own papers if you have to. You can do it. Not with an entity. You're not saying nothing. It's absolutely true. The judge will say, I can't talk to you. Unless you buy another house. Okay, Mr. Mouse.
Can I ask you about a scenario? So if, I do digital marketing as well. So as a consultant, I have access to customer databases.
Okay.
And if there were some kind of data breach,
Yeah.
that's, and that's kind of worst case scenario for me, I think, is somehow I'm held liable for that.
Yeah.
In that case, like, is it better to be an LLC, or a sole proprietor and not any kind of formation?
Well, how much liability are we talking? What are you good for? You
Oh,
gonna
me
get you
personally?
$500,000? What do you think? What would you get sued for?
I don't know. I mean,
You got big dollar customers? You got
Yeah.
huge databases?
kinda, I have some pretty big customers.
I don't know. How, I can't predict what litigation on breach of
Either can.
confidentiality and not having adequate security in place would be. But all I'm trying to tell you, if you're a sole proprietor, you can represent yourself.
Okay,
If you're an LLC
interesting.
or you're a corp, you're not representing yourself at all, and I don't care how long the litigation lasts. You can last longer than your pocketbook. And then you don't have an attorney, and then you're defaulting. So it's not as, oh, so glib, I just left. Oh, you got limited liability. They can't touch your personal assets. Bullshit. They put you on the lawsuit, and you say, well, I'm a limited liability. You shouldn't put me on there. The judge says, we'll see. Your name's staying on there. But I want my name on. We'll see. I'm not taking it off. Okay. What are you gonna do? It's called problematic. And it's not as glib as, it's not glib. But-
Some clients wanted me to be an LLC in order to work with them, especially with like the passing
Big
of
companies,
85. Yeah.
big companies, because they don't want to get stuck for your payroll tax. That's why. Okay, because you should be an employee, but if you're an LLC, you can't be an employee. That's why, especially in tech.
Okay, interesting.
That's
Okay.
fine. Okay, you can do that, and you're not gonna work with them. It's there, you wanna be cute and be a sole proprietor, or you wanna be an LLC and have a job. You decide. It's up to you.
That was super helpful, thank
What kind of insurance do you recommend for sole proprietors? Liability or?
Yeah, I'm not an insurance broker, I don't know a great deal about it, but you can get, liability insurance depending on what you're doing.
Like jewelry and fashion accessories?
Yeah, that's a real big risk. I mean, I heard somebody got poked by a pin one time in their hair and they bled. My God, I don't know how they could have handled it, but, I don't know. You have to talk to an insurance company. I am not the person, but, in my practice, I got a law practice, a CPA practice, and we got E&O insurance on the CPA, we got E&O insurance on the law. It's errors and omissions, we just, pay an arm and a leg for it, and, that's what it is. And then on the, get premises, we got office, so we have premises insurance. If somebody falls and impales themselves on a pin or something, hopefully they have coverage. But talk to a business insurance agent, they'll help you out. And then the other point I made is when you get the business, whatever liability, look at an umbrella, it's above it. Doesn't kick in until stratosphere.
It's very helpful, thank you.
Okay, when we're an LLC, single member LLC, I'm on page 13. We're going slower this time. You guys must have good questions. For tax purposes, it disappears. Page 13. So you have a Schedule C, like a sole proprietor. You form an LLC. Okay, do I have to file a separate tax return? For federal, no. You just put it on your Schedule C as a sole proprietor, and then up above you put your federal ID number, and I would call it, an LLC, or it's called a disregarded entity. Disregarded because there's no federal tax. But California, along with that $800, you get to file a tax return for California to see if there's some way possible they could tax you. And that's Form 568. So you have a separate tax return due every year on an LLC for California. When you have a C Corp and you have an S Corp, or you have a multi-owner LLC, you have 2 tax returns every year. A federal and state entity return, and then your personal tax return. Oh, doesn't that drive up the cost of the entity? Like another $600 to $1,500? Yes! You gotta pay somebody or do it yourself or figure out how to get the corp tax done. Oh, they're so cheap. Only $800 a year. No, there's extras. So we get multi-member and then they get a K1. If you're a single member, you don't get a K1. It disappears, the entity almost. Okay, so on page 14, I talk about that extra tax. When your sales get above $250,000, it does happen. We already talked about general limited partnerships, LLP. Irrevocable trust, people don't think about it because we do trust and make them. You can run a business under an irrevocable trust. You don't have to register with the state, and you don't have, it is a separate entity. An irrevocable trust is a separate legal entity. A long time ago, when corporations were getting started, we used to have a thing called the Massachusetts Business Trust. And I just point that out. I don't see it very often, but I ran across one company. They said, that's what they were doing. They said, well, we're not a corporation, we're a trust. Okay, you do business how you want to. Okay, choose an entity type. You jump through all the hoops, you figure it out. whether you want to register or not. If you want an entity, you're going to Sacramento to the California Secretary of State. If you want to be a sole proprietor, you can use your name and no problem. If you want to use some other business name, then you have to file what's called a fictitious business name statement with the county that you are in, going to run the business from. So we formed one recently called Deeds for You. We do real property deeds. So we filed the county. Then the rules say you've got to advertise it in a newspaper of general circulation. And so what do? You pick the East Bay Times and you waste your money because it's too damn expensive. Or you go to the Contra Costa News Register in Martinez and you get the publication for way less. You choose. And then after you get the advertising done, you get a certificate of publication. And then if you want to open a bank account in the name of your business, the bank's going to want to see your fictitious name statement filed and your proof of advertising. And if you have an entity, you don't open a business account until you get your federal ID number. So we get them for clients when they're in the office. We just go to IRS and get them. And for an entity, you don't use your social security number. You can't. You're not allowed. And that's a federal ID number. They also call it TIN, taxpayer identification number. There's another name. They call it employer identification number. They got a bunch of different names. And then if your entity has payroll, you've got to go over to Employment Development Department and get another ID number so you can report payroll tax.
A quick question on fictitious business. Do we have to renew it every 5 years, the fictitious business name?
Yes, it expires.
Right, 5 years.
Or you can forget about it and keep using it, like most people do.
Yeah, I forgot about it for many years.
And you
and
keep
then-
using
yeah.
it. What are
So
they
there's
gonna
no
do?
penalty, nothing, right? If we.
Not that I know of.
Okay.
You just keep using it.
Okay, because I needed to get that to open a business bank account at my credit union. And
And if
that's-
it's already expired, the bank may balk and say, oh, it's already expired. You gotta get another one. Because banks are getting really picky. They got these federal rules called Know Your Customer. It's like turn them upside down and shake is what the rules are. All the data.
I have a smaller credit union, it's the Patelco Credit Union, they are much
Okay.
more friendly.
Okay. Do you have a separate federal ID number?
No, that I don't have, I use my social.
Go do it. Get a federal ID number.
Okay,
So when
should I
people
come to
issue you a 1099, it's not your social security number. You don't have to use your social security number. Get a federal ID number.
So then how do we get a federal ID number?
Fill out an SS4 form, or do it online. We get them for clients. But it's just like getting a taxpayer ID number for an entity. But if you're a sole proprietor, don't use your social security. You don't have to.
On the
Get an
tax.
ID number, that doesn't mean you have to pay payroll tax or anything else.
Thank you.
Okay, so I beat the entities to death. Let's see what else we got here. Oh, you're gonna need a registered agent for service of process when you form an entity. For example, I sued Sears one time, and you can't just go down and serve somebody that works in the automotive department and think that they got notice. They have a regular person that's agent for service of process. So a couple weeks ago, we do that for clients. we got served papers, legal papers. Clients getting sued for wrongful death of a customer. Bad news. But you have to have somebody be a registered agent. When we form agents, we form entities, I'm the agent. So I know if they get sued. You can do it yourself, but there's some advantages of having an independent person. And then right after you file the entity, within 60 days, you gotta file this notice of information. They don't tell you about that. It's another form. For an LLC, it's an LLC 12 form. So it says what your entity is business, and it says who's your agent for service of process. And so that's another cost of an entity. 25 bucks to file it? Nobody does, so they get the $250 penalty plus the $25 fine. So they make a lot of that. And you have to do that with an LLC every year. You have to put that statement of information in, and every 2 years with the court. And we also offer $175 a year. I'll be an agent for someone else's entity. It's already formed or whatever. Federal ID number. Okay, we already talked about that. ITIN. ITIN, if you're illegal alien, want to work in the United States, you can't. You can get an ITIN, and the ITIN is it's now called the Individual Taxpayer Identification Number. Used to be called International. And what it does, gives you a number. Oh boy. Just like a Social Security number that you can use to report your taxes. Like I had a client that was Peruvian. They had businesses in Florida. So we had to get an ID number so they could pay their tax. And get Robitussin that cures everything. So we got the ID number, and then they can file their tax returns. And it might be real useful for people that are here coming up from the borders. Then you have an ID number for getting a bank for an account, for different kind of things. It says right on the form it doesn't allow you to work, but gee whiz. Okay, so on page 27, this is a legal Zoom joke. Let's make it official. So you pay legal Zoom 100, 200 bucks, and you get an LLC. You get a piece of paper. If I'm forming an entity for somebody, they get a corporation binder kit, their record system, they get stock certificates that are issued. They need an S-Corp election. They get bylaws and an operating agreement if it's an LLC, employer ID number, records for the board of directors meeting, and explanation of the duty as a business owner. So costs a little bit more than legal Zoom. Oh, sometimes you see these ads, you get an out-of-state corporation, and they make it seem like, oh, I'm going to be on the internet doing data mining or something, and I'm going to form a Nevada corporation, and then I don't have to pay California tax. And guess what? It's not like an invisible cloak with Harry Potter. If you're doing business here and you're here every day, you can't say that your business is in Nevada. They've already caught on to that. They'll say, oh, do you have a credit card? Do you ever charge anything for your business? Oh yeah, give us your statements. Oh, Walnut Creek, Concord, Pleasant Hill, Walnut Creek, Concord, Pleasant Hill. Where do you do business? Nevada. Really? I don't know.
So why does everybody do Delaware?
Why?
Yeah.
Okay. Delaware has the most favorable corporate tax law, and they always have. they've got a body of case law that is pro-business, and they keep their data a little bit more private. And they got some really neat things like there's a layered LLC where you can have one LLC with a different entity under it, different entity under it, different entity under it, multi-level LLCs. Those are tricky. But it's just friendly. And they've got a lot of corporate service providers. It's big business. Delaware's a really small state.
But it wouldn't change the taxes.
What happens when you form? You can form an out-of-state corporation. No problem. Get Delaware. Fine. You come to California, you pay the same fee as if you formed it here. You get to pay the same 800. So you're okay. But if you don't register it
I
here,
see, that's the problem.
first of all, you can't use our courts. So the state of California can sue you and you can't go to court because you don't have a right to our courts. Gee, they got one up on us. Disadvantage. I wouldn't play that game at all.
So that's more for like really sophisticated entities, right? Who would probably, or just, you know.
Well, it depends on the circumstances. If you've got, say, two family members, one's in Georgia, one's in California, they're doing business in both places, you might want to allocate your income, get a Delaware corp, and then the state, you just report what that state did. I mean, there's some real legitimate reasons for it that are not frivolous. Okay, we talked about fictitious business names. Fictitious just means just not your name. It's made up. Your mom didn't give it to you. You didn't, call XYZ company. Your mom didn't call you that. She called you something else. Okay, page 32. When you form an entity, and I counsel women about this more, your address for the business becomes a public record. Okay, so you need a business license, public record. You form a website, you put the address, public record. All these things start coming back so that your home address you maybe don't want anybody to know about. It's like, I'd like a little privacy, please. So if you hire one of the, if you get a P.O. box, which I have, every time you try to use it, they go, oh, we gotta have a street address. And then you're dealing with a company, you say, where do I send the check to you guys? You say, a P.O. box. But the problem with the U.S. Postal Service, you can't get UPS and FedEx deliveries. So if you get a FedEx or a Postal Annex mailbox, you have a street address now, not your home. Putting on your check. That's, oh, where's your business? Oh, right over there.
I think the post office has actually changed it, so you can use the address of the actual post office.
But how's UPS gonna get in your P.O. box? Figure that one. How does FedEx back up and put their, they can't get in?
They give you a little yellow card to pick it up at the,
No, FedEx can't give you a yellow card.
no, oh.
Yeah, so I have a mailbox, and then it's for business, the mailbox. And
Is
the
it
street-
US Postal?
US Postal, and the address is 2070 North Broadway.
I
number
know,
572.
I know, I used to have one there and I used to pull that trick too.
Right, but when I have
2070
FedEx
North
delivery, it
Broadway,
has to
number
come to my house.
4313. It
Yeah,
doesn't
but
work
if it's
and I'll
FedEx
tell you
delivery-
why. Let me tell you why. You're in business. You buy something, they're gonna ship it to you. They send it FedEx. They can't give it to you. You get one of these mailboxes, they do FedEx. You can ship from there. You can receive from there. It's way better.
Yes.
It's a street address. And when you go to get a business license and you put, a residential address, they go, oh my God, I don't want you to put a a billboard in your front yard, you can't advertise, you know that, don't you? Yeah.
Yeah, I had people from the Chamber of Commerce coming to my home because they listed my home address.
Yeah,
It was
But-
scary.
but I tell women that because sometimes, you know, the booger man's out there and they don't wanna have a home address showing. They go, you know, go talk to FedEx. And, it works. I mean, you got a street address, okay. It works for all purposes.
If
So-
you're a sole proprietorship, do you even need to register your address anywhere? Let's say you're using your name, not a fictitious business.
Yeah.
Are you still registering something? I think I
Yeah.
Yeah.
On your
What
business
city are you
checks.
in?
Oh, well,
Walnut Creek. Man, I'm in Walnut Creek too, and I gotta register downtown. My name's on there on a business license, and it's required.
got it.
So it's required for you too.
Yeah. On business checks also, I have my address, the PO box address. I used to have a UPS mailbox, yeah.
I recommend the UPS, FedEx, Postal Annex. It works, you're done. You just get it out there, put it on your checks, put it doesn't matter. You wanna ship something, you already have a business relation, put it on my account. And, you know, people who live vagabonds, they travel around in motorhomes and stuff, they use those and they just tell them, I'm gonna be in Utah for 3 weeks. No, I'm gonna be in Dallas for 4 weeks. And they just forward their mail wherever they're going. You don't even have to go down there. Anyway, it's a good idea. Open a business bank account after you get your ID number and your fictitious name or whatever you want.
I have another question for you, sorry.
I got another answer for
What-
you. Sorry, it's gonna be a
What's
wisecrack.
the
but-
difference between if you're a 1040 employee, you're just doing things, you know, getting paid, and you have to deduct taxes when you file taxes, versus sole proprietorship?
Okay, glad you asked, because it's a world of difference.
Okay.
First, it's not a 1040, it's your W-2 employee.
Right.
Okay, so your W-2 employee, you have your federal state tax withheld and your social security, but you only have to pay half of it, not the 15.3. You only have to pay half. Your helpless employer has to pay the other half. Okay, so, and then you try to write something off. Can't write it off. No, you wanna write, no, you can't write that off either. No, you can't write anything off. You go self-employed. Okay, I'm really independent contractor. Well, I gotta write off this, okay. I gotta write off that, well, okay. I need coffee for my customers coming in. They like real good coffee. And so, you have to get real good coffee. So, the difference is, the term is Schedule C. Schedule C shows income and expenses by categories. And your total gross sales goes up in the top, and then all your expenses by categories. And then when you get to the net income, take the net income over to income tax, and then you take the net income over to Schedule SE. Write it down, Schedule SE. Self-employment tax, 15.3.
Yep.
We've been there, done that.
Yep.
So the difference between being an employee and being in a business, one is you can write things up. And the other, you don't need to write anything off. Your employer's writing everything off. So you may not, you know, doesn't matter. You can be both.
What would
Like
you, I'm sorry, go ahead.
Like for example, small businesses, we can write off like mileage, right? But when you get W-2, you cannot write that off,
Correct.
mileage, right? So,
What she's talking about mileage. You take a car, say all the costs for the car, gas, oil, repairs, maintenance, depreciation, and let's say I drive at 10% for business, then you can take 10% of that, write it off. But she said the word mileage. There's a per mile optional method that's 55.5 cents a mile. That you just say, I drove that many miles. And you don't have all that other people. The best way is you keep both records, the miles and the actual, and you pick the higher of the two. Whichever benefits you better.
What's the one you'd use if you were really trying to keep money in a business, maybe for a decent period of time with no intention of taking any profits out, if that makes sense? Like, let's say for 5 years, I just, I wanted to pay the expenses of this, but I want to leave the profits in the business, and I have no intention or need to take them out. Is there an entity you would recommend?
What are you gonna do at the end of 5 years?
Or 10 years, I don't know. It's some indefinite period of time where it's not right, it's not a right away thing or ongoing thing. I'm trying to retain money.
Okay,
in
I
the
understand the
business.
question, but I don't see the difference with this mix of entity versus sole proprietor versus C Corp, S Corp, whether you leave the money in or take it out.
Yeah. Okay.
I don't see a difference.
Okay,
The net result is what are you left over with?
okay,
And whether you take it out or don't take it out, it's your business.
okay,
And it is your business.
right.
And I can't think of any way where you squirrel it away.
That's
and-
kind of what I'm getting at, but yeah. but
Well, if you really want to squirrel it away, get a pension plan. Then you deduct going in, a 401k or the SEP. SEP
Okay.
is a good one. You can put up to like 56,000 a year.
And just put it all into that, or.
Yeah, but you can't take it out until you're
Right,
59 and a
right,
half, or you
yeah.
get penalized.
Right.
But when you're talking about a bulk of money, how about you preparing you and your wife for retirement? Because I bet you sometime you're gonna be 70 years old.
If I'm lucky, yeah.
Yeah.
Right.
And so that's maybe when you wanna have
Right,
have
yeah.
a retirement. account.
Right, yeah. So you could do that.
That's why you deduct it going in too.
Okay. Okay. But you wouldn't, then you would just basically deal with it when you retired essentially. And you wouldn't.
You don't start thinking about it when you retire. That's called a little bit too late.
No, I mean, right. No, but I mean, you wouldn't take any of the money in this idea until you actually basically.
Retire, you leave it in there.
Right, that's what I mean.
And another thing that's really nice is you start socking money away in a Roth IRA. We just did one. It was in an estate. $124,000 sale. Did the tax rate. No tax. Why? It's a Roth. There is no tax on the damn thing. That's pretty true. So you can combine it.
Okay.
Retirement plan, you deduct going in. Roth, you get no deduction. You don't get any tax when it grows.
So I have no retirement.
Oh, no!
Yeah.
I've heard of people like you. Oh, my God.
So
You're
what
the
do you-
first one I've ever met.
Well, I'm an entrepreneur, so.
Entrepreneur, that's not an excuse. It's called take 5% of your income and plunk it away before you spend it every month.
So what do you recommend, SEP or Roth IRA?
I recommend you panic. For you, you want deductions. So the SEP, or there's another one called the simple plan, but you want deductions
Right.
because you're not a high roller.
Uh-huh.
You're not making $350,000 a year, are you?
No.
Oh, okay. I didn't. I just wanted to make sure. If you were, then a Roth might work out better.
Okay.
But you want some deductions.
Yes.
And you need to get on the stick. I'm not kidding you. 10% of your net income or your gross. Get it out of your account, do an auto transfer. We're talking fire alarm time now.
Okay.
You get on it.
I'll talk to my
It's-
credit union.
Yeah. You just do it. And the sooner you can, the better. Because, time goes by, cheap. Time flies and you're having fun. Okay, now it's time to retire. Gee, I don't have anything. I don't like dog food. I don't like cat food. Huh. You should have thought of that ahead of time. Just kidding. Okay, what did we forget? Oh, I got one. Every business owner that comes to me, oh, shoot, I gotta get this thing too. Every business owner that comes to me, they all say this. They come in and, well, we've been thinking about it and we're not gonna have any employees. We're gonna have everybody be independent contractors. Every one of them says that, not without fail. Oh, we're not gonna have any employees. Yeah, like you thought of it. The state of California and the feds are so far ahead of you, you don't know. There's a big problem with that. Don't play that game. First of all, you have to have workers' comp. $1,500 fine for each worker you don't have workers' comp for. You have independent contractors, and then they don't work for you anymore. They go down to unemployment. Who did I work for last? Oh, he was my employer. Huh? We look and there's no payroll tax returns. Gee, do we have a problem? They pull your check register. Every check made to a person, they put payroll tax on. They go back 3 years. They assess the employer's payroll tax, the employee's payroll tax, and a big penalty. It's exciting in a kind of an adverse way. I had a client do that, a carpet contractor, got nailed. Went back 3 years, just socked it to him with payroll tax. We're going along, I thought everything's fine, we're learning this lesson. 3 years later, they audited him again. He got nailed again! Duh! Anyway, big warning, don't play that game with independent contractors. What you're doing is you get the liability. They get away scot-free. They don't get any penalty at all. None. Oh, they reported, didn't report it, you get, oh, and you say, oh, I'm gonna give them a 1099. Then the state uses the 1099 to come back and say they're employees. Thanks for telling us.
So 1099 is only required for over $600, right? If you pay them over
For
$600.
people who are self-employed, for bank accounts, it's $10, but it varies, yes, is the answer.
But if you're just gonna hire for seasonal basis, on-call basis, do you still need payroll tax? I mean, can you not just do a 1099?
Yes, you're good. You're just like everybody. Just, we don't need it because in my circumstance, we don't like it. Guess what? You hire for somebody for 1 day. They're an employee. You tell them what to do, when to do it, how to do it, and give them the tools. Guess what? That's called an employee. Just do it. It's way better to just do it. Hire a company like Gusto or somebody to do your payroll tax. But don't play that game. The longer you play that game, the more liability you're building up. And people do exactly what I said. They don't work for you anymore, they go to unemployment. And they say, I worked for Al here, yeah. Yeah, and he was my employer for all this time, yeah, I know. Guess what? Now you have a payroll audit that you didn't want. And if you do it right, you go, audit me all you want.
Yeah, my
I
kid
don't
works
care.
for me, so.
Your kid?
Yeah,
There's special rules for kids.
but I mean, she's 21 now.
I know, but there's special rules
Okay.
for family. I'm not gonna tell them to you because I forgot. But there are. I can look it up quickly. Okay, I wanna, you see this yellow thing? This is audience participation. Line 1. What business are you gonna start? What's your goal? Write it in right now. I want want to start an XYZ company. Come on, you two, you can't get out of this. Don't tell me you're not sure, just write something. Do it. No excuses. Okay, has everybody got their, what they're gonna start? Okay, when are you gonna have this business going? How long is it gonna take you to get your stuff in order? 3 weeks, 3 months? 4 months? Write that down. What's stopping you from getting the business going today? I don't know what I'm doing. Haven't made up my mind. My wife didn't give me permission yet. Anything that it is, just write that down. How are you gonna overcome that problem?
Dear, I'm starting a business.
Just kick back and enjoy the ride. How are you gonna overcome the finance? Beg, borrow, steal, invent, adapt. What's benefit for you? I'm gonna be a bazillionaire. I'm gonna get to sleep in and work 85 hours a week. And then, is it worth it to you to do that? Then you put the date you're gonna follow up to get to it, flip it over. This, you put a picture, a visualization, 3D for your mind, in color, that says you get a picture of a business you would like to have. You plunk it right down there. And then on affirmations, you go, man, I'm glad I started that In-N-Out Burger in Fairfield, because I'm making big bucks now. So that's an affirmation. You say it in the positive, that you already did it. You write down 2 or 3 affirmations. And then when you get there, write down the date you did it. So fill that out and it'll happen. It's guaranteed. And no limited liability. What other questions can I answer for you?
I have a quick one. So.
Even after I picked on you all that much, you're gonna try again, okay?
Yes, I'm a home-based business in Walnut Creek,
Okay,
but I do pop-ups all around.
pop up.
Yes.
Like a
so-
Jack in the Box, hello.
Like, what do you call it, art and craft shows.
Okay, oh, yeah, I got
Trunk
you.
shows, like
Gotcha.
different
Yeah, yeah,
venues,
yeah.
different counties.
I understand.
So where do I need the business license from? I'm all confused. Do I need to get it from Walnut Creek or?
Do your home base, Walnut Creek,
Okay.
only if you have to, the other state, the other places. You don't wanna say nothing.
Okay.
No,
And
I'm not-
sometimes when I go to Livermore, they ask me, get a business license for the day or something like that, so.
If they ask you, then you gotta get it.
Right, it's $35, yeah,
Sorry, you can't get a booth.
right.
You're stuck. So do it by the stuck or stucky, only the ones you have to. It's a nuisance.
So then I should probably register with the Walnut Creek, right?
That's
Walnut
where you
Creek City
should,
of
that's
Walnut.
where your business is located, yes.
Yeah, my home, yeah, it's a
Yes.
home-based business, but I'm actually
Yeah,
doing
use
shows
your
outside.
FedEx office that you bought.
Okay,
And that's your home office, that's traditional, that's what you're supposed to do.
okay.
And the others, I would do it only if I had to,
Are there some cities that don't require business licenses?
Yeah, the ones that don't know you're there. If they know you're there, they want it.
What's the point of the business license?
What's the what?
What's the point of it?
Point, what's the point of any tax? Government greed.
So the city gets your taxes?
Yeah.
Yeah.
No, there's several things. I don't know if they share sales tax or not.
Oh.
They might. But every governmental agency, they got their tentacles out to get as much money so they can operate. And have you ever seen a government vehicle that wasn't brand new? I never have. So they can buy brand new vehicles every year, so it feels real good to drive around. That's a good use of their tax money.
We're delaying those next year, because of our budget deficit here in California, so you won't see any
Yeah.
for the next 12 months.
I'm not gonna hold my breath. I'm seeing lots of new government vehicles.
You mentioned the payroll company. Which one was that? The payroll company?
Gusto,
Gusto?
Gusto,
G-U-S-T-O?
Gusto.
So what's the cost breakdown of setting up sole proprietorship versus LLC versus C Corp? I mean, I know it's the $800 for some of those, but is there additional amounts that you need to pay
Yes,
for paperwork?
yes. For the entities, sole proprietor, if you got a fictitious name, you're done, advertising, done. For the entities, you got 800 a year. You got a $25 statement of information to file every year. You may have a separate tax return for federal and state. Yeah. And those are the bulk of the extra costs. But they keep going. And if there's no benefit, I mean, I see people all the time that go, oh, I got a whole bunch of liability. Like what? Does anybody that does what you do ever get sued? Well, not that I've ever heard of. Well, what's the word? And a lot of it is just the word. Oh, liability. There's two kinds of liabilities, by the way. A liability in a corporate entity or an LLC is a liability of that legal entity. It's not your liability. So they can say limited liability. Okay, that's true. But if you get sued and they get sued, that's a different kind of liability. It's not like a bank loan or anything. And that's way different concept. But the deal is, for your question about sole proprietor versus entity, is it worth it? Is there any reason in the world? I can see it if you've got some kind of really active type business, a whole lot of things going on, you know, maybe somebody gets hurt in it or something like that one I had that the customer died. That's pretty serious stuff. They're an LLC. And fortunately, the owner, the name didn't get on the lawsuit. I couldn't believe it. The attorney agreed. But anyway, it's what you want. But I just want people to know what the real situation is, not, oh, let's make it official. And then you get all this other hogwash with it. I like sole proprietorships. I don't see much wrong with it.
So could I have a sole proprietorship with one employee? Can you have any employees with sole proprietorship? You can?
Yes.
Okay. So I could have one employee and then pass the
You have
rest
as
of the
many
income.
employees as you want.
Okay.
In a sole proprietorship, you could have an LLC or a corp and have different employees,
Okay.
whatever you want. There's no problem
Okay.
at all. That's what you're supposed to do.
Right.
So you do what you're supposed to do and you sleep better. The other thing I just want to say overall, in business, be honest. Be honest on your tax, be honest with your customers. Honesty is the glue that keeps our entire culture together. Without it, everything falls apart. So keep that in mind, and it's a way to be way better, long run, and stay out of problems.
Thank you so much.
Okay, so I think I run out of steam. As if I was a steam engine.
Oh, one last question. The business meals, she was talking about taking people
It
for
tastes
coffee.
better when you deduct them.
Yeah. Business meals, do you deduct 50% deduction, or is it full deduction? Like if you have dinner for $100?
No, it's 50% deduction now, it's the entertainment that you don't get. No entertainment,
Okay, so just meals.
yes.
So no movie tickets. I can't go to the movie.
No, entertainment, no.
not if you gift a client something, no gifting?
Not entertainment.
Okay,
Must have receipts, must be reasonable.
okay.
I
What
went to
about
an
if you
audit
give
with a
gift?
guy who was salesman. He had his audit for his meals. He bought big pile of receipts. 4-digit dates, 10/23/03. No year on any of them. You know, yeah, how many times you use them receipts? Right, keep receipts, who was entertained, why was it business? It's legitimate, but if it's all your family members, kind of questionable.
Morale building?
Yeah.
No, that's not a thing.
Moron building.
Yeah.
And my bookkeeper said that suppose if I'm at a trade show and if I'm working and if I
Yeah.
have a meal and then go back to work, that meal is deductible. But if I have a meal and go home to rest, then that meal is not deductible.
I disagree a little bit.
Okay, so yeah.
I mean, the way I see it, when you go out to a trade show or something and you have a meal, you could have brought your lunch. And you're just feeding yourself. It's not like you're so far you can't go home. I don't see it. When I'm talking about meals, you're entertaining some. You take your bookkeeper to lunch. Okay? You take your biggest customer to lunch. Something like that. That's what I call meals.
Okay.
Not feeding you.
Okay, all right. Thank you for clearing that because I had a
I would
different
disagree.
understanding. Yeah, okay.
It's just like overnight on business. If you have to go like over 50 miles and get a hotel and a meal, then all your meals are on it. It's a business trip. And the hotel, fine. But if you rent a hotel down the street and have meals, it doesn't work. Because you were just hiding out from your husband.
So it has to be over 50 miles?
It has to be some way where you couldn't have conveniently got back
Yeah,
home.
because sometimes like I have to stay at the Berkeley Hotel because of traffic in the morning.
Oh yeah, I would too. That's just horrible traffic.
Right,
Yeah.
right. Sometimes you
Yeah.
never know when you're gonna get to.
That's a
the
good business decision.
So,
I think I'd agree with that. Yeah, that traffic would be horrible. Okay,
So like me and my wife file our taxes together, married. Like,
I would hope so.
But how do you, like, you just have that separate forms and you just write off all of that?
okay, what happens is you have to file joint,
Yeah,
otherwise your tax bracket doesn't make any sense anymore. If you have a business, she does not, you put that Schedule C in with your name on it.
okay.
That Al's running this business, and we did this, that, and the other thing, and it just shows as yours. And when you get over to your self-employment tax, that goes in your Social Security, not hers.
my very last question.
Oh, I'm not gonna limit you.
We've been filing married jointly, but I wanna do married separately. Is it
No,
gonna
you
be more
don't.
expensive?
No, you don't.
No?
No, you don't want to. Try it on your computer and see what you have. 3,000 or 4,000 more in tax. I am not kidding. I have to do returns when people are getting divorced. They come in, I'm not gonna file with that dirty so-and-so. I don't care if I have to pay more tax. They said, you're not gonna like this. We do it, and they go, holy shit, I gotta find my spouse, we're gonna file jointly. Oh, I didn't wanna pay 2,000 more.
Yeah, because that's
It's
my
horrible.
situation. It's like we are separating, so we're starting.
No, you still wanna file joint.
Okay,
You do. I guarantee it.
okay.
There's no scenario where ever,
Yeah, there's
Yeah.
one. Yeah. Your spouse is a crook. They just robbed the bank, owes a lot of debt, everybody's out to get them, and they have never reported their income, and you don't want anything to do with them, and you can't file jointly because you get joint liability. Yeah, that's a good way to do it. If you've got a scoundrel for a spouse,
okay.
get divorced, then file
I have a
separate.
friend of mine, his wife has her own business, and I think she has a pretty aggressive accountant, and she pays very little in tax, so she files her taxes separately from his, which is a traditional W-2. And they have an accountant, so
They file married separate?
separately. So I don't really know what, their accountant does. but
I have done it so many times. And the client freaks out when they find out how bad it is. It's just like, duh. I mean, would you, just to have a difference in papers, want to pay $2,000 to $3,000 more? Is it that much of a thrill? Is it that much of a risk? I don't think so.
The accountant's fee, does it go up if you file separately, married separately?
Double or triple. Because,
Really?
yeah, I tell you
It goes
what,
up too?
if you file separately, it goes up triple. Because they told you not to do it to begin, and you gotta do 2 tax returns, and then when you throw up, they gotta put it back into one, so now they did 3 tax returns. Yes, it goes up. It goes up a lot. And it works that way.
Yeah, because I'm also in the separation process, and so when the divorce is
Joint.
final, then.
Just your mantra, join, join, join.
Okay, that's my affirmation.
That's what you say. Oh, we're gonna, oh, yeah, join.
Thank you so much.
Yeah,
Yeah, thank you.
Great.
Thank you so much.
Yeah, yeah.
So like, as you're starting out the business, the equipment and stuff that you're buying, you
Yeah.
just budget all, like?
No.
How does that?
Well, you capitalize it, the way, it's kind of tricky. You're supposed to depreciate it. Over $500 of assets, over 1,000. You depreciate it, you put it on a depreciation schedule.
Okay,
That's what they say to do,
okay.
because it's gonna last several years.
Right, right,
So we put it on a depreciation schedule, like they say. And then we write it off in that year, because of section 179. It's the truth. That's the way it works.
So the depreciation scale for, like, for you, for the year or for like?
For the year.
Okay.
Yeah, all your assets go, the big assets go on a depreciation schedule.
Okay.
You're supposed to. You can't write it off as supplies,
Okay.
or they can tax you differently. But because they're trying to encourage small business somewhat to buy equipment,
Oh, yeah,
you put it on the depreciation schedule. We're gonna take it over 5 years, and we take it all right now. Done. But the depreciation schedule just sits there. It is exactly how it works. It doesn't have to make sense, it's tax.
yeah.
It's nonsense.
Even my computer, my accountant does the depreciation schedule for computers.
Yeah,
that I bought, right?
yeah.
She does like over the years
Yeah,
depreciation.
right. And then you write it all off in the 1 year. Unless you're not making money, then you don't write it off in that year. You save it, the depreciation for next year.
So my final question, promise, this is the last one.
I'm not limiting you. You're the one that's limiting yourself.
I use my car for business, right?
Yeah, I don't know, right? I'll take your
90%
word
of
for
the
it.
time. So should I be getting business insurance, like when the auto insurance asks, do you use your car for business? Do I tell the auto insurance that I use, or otherwise the insurance premium is gonna go up,
What do they care? It's just a car.
right?
It's just a car.
Is he really doing it for business, or you're just transporting stuff?
Transporting.
She's transporting, going to shows. She
Yeah.
is using it legitimately for business. She can't sell her stuff until she brings it to the market in Martinez. It can't get there by itself, and she's not gonna pay FedEx to ship it. She's gotta have the car. It's business use, absolutely. And when she goes driving around to buy all her materials, that's business use.
Yeah, so do I tell Geico Auto Insurance that I'm using it for business, or
Oh, no.
they don't care, right?
Oh, no. I don't know if they care or not, but I don't care.
Yeah.
It's none of their business. You just use it.
Yeah.
You don't
Okay.
tell your insurance, you know.
Yeah,
You
I
don't step on your feet either, you know.
Yeah, I mean, going along with being honest, I often wonder about that, you know?
Well, I honestly am not gonna tell them because they don't wanna know.
Now you know it's Geico.
You don't wanna know. Why bother people with a bunch of stuff they don't wanna know, huh?
Thanks again.
Yeah, happy to help.
Is there any difference in health practitioners that are doing telemedicine from like any location anywhere around, could be their home, it could be.
Thank
you.
you.
know, Arkansas, or it could be in the brick and mortar versus having a brick and mortar, like having business.
I understand. Outside of the license